So this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis. We will look at what happened in the market during the day and how we can plan for a better trade for the next day. And this is the analysis for March 17th, Thursday 2022. So the market today was bullish. It gained nearly 2%. The market regained the momentum basically, right, after a small dip and correction that happened yesterday. And remember, we have a weekly expiry, and also the Fed outcome reaction also would come in. Also need to make note that we are at a resistance point, major resistance on still caught within the gap. So as usual, the pre-market analysis is for the next day, Thursday, and expiry date March 17th, and we'll be looking at them based on all these parameters that you see on the charts on the left side and additional parameters that you see on the right side, right, which would involve looking at the global markets and FI participation, volatility, and open interest in all those, right? And we'll wrap with some action. So look at the candle here. It's a clear gap up that has happened, and a bullish candle, bullish close, right? Clear 2% gain has happened on both the indices, and that's a continuous rally which makes to more than 12% or BANKNIFTY and nearly 8% on Nifty from the bottom. So there is a good up move, the continuation of up move is what happened exactly. Let's get into the specifics, right? So 312 1.87, and it formed bullish candle, of course, and the main thing is in 20 DMA that was lost yesterday was regained today by the Nifty. But the thing is, it is still inside a window gap. We'll see that in the resistance and support levels charts. Still within the window gap and still below the 200 AMA, right? So remember that the price action is still on the trend line edge, on the downside, sliding downside. So there could be every chance that it can slip back. You never know. It is not really broken out. You can't say unless the gap is covered. Also in the weekly you have a double to pattern also that may be visible. So BANKNIFTY similarly 2% gain nearly, right? 725 points gain from the previous candle, and it's a bullish candle. And it is also close above the 20 DMA yesterday itself. No, yesterday it had not. Today only BANKNIFTY regained the 20 DMA, and that 20 DMA that was cleared today was after 18 days of staying below the 20 DMA. So that is remarkable, right? So it took 18 days for it to regain back the 20 DMA. So but still it is at below the 200 DMA, and there is a gap resistance also far away. And that is also having a trendline channel downside price actions, what you see, and double to pattern also can be useful if you look at the higher time frame. Intraday basically it was a gap up and then some consolidation in 1% range, and the gap up was almost 1%. So, and then the final or the 3 p.m. there was one in Nifty that was seen. So that's what basically it happened. So this is what the intraday price action. It was a big gap on Nifty and then consolidation in 1% range. Gap was 1% and then final 1 hour spike. BANKNIFTY, that spike also did not happen, but the gap was substantially good and then consolidated in a 250-point range. This is a 100-point range nearly. So the consolidation basically. So most of the benefits happened overnight. Well, in the bands, if you see, you can see that the width from the median to the upper and the lower bands are wide. That's why we have very highly volatile markets these days. That continues to be there, and you can see that there is a contraction. That means consolidation on sideways more on the lower bands. Lower bands are showing that the down move is post arrested for some time, and then maybe consolidation for some time. How long we don't know, but volatility is huge. That's what the monitor wants in short term are indicating. Make a note of the resistance levels. The immediate resistance will be 7,000, 17,000, and 17,050. That is taken out, then 7,200 to 7,300. That's taken out, then 7,350 to 7,400, and above that you have 7,500 to 7,600, which is Fibonacci 23. So anything close above the 7,050 would be very optimistic. And downside the support, immediate support would be 16,800 to 16,900, which is Fibonacci 38, and below that you have 16,700 to 750, and below that you have 16,500 to 650, and then below that 16,350 to 16,450, which is the Fibonacci 50, and this is the gap that happened when it is moving up. Below that you have plenty of swing low supports that we don't need to mention. BANKNIFTY, it's at resistance 35,600 to 35,900 zone, near to 36,700, and above that you have the resistance 36,300 to 36,800, Fibonacci 38, above that 36,900 to 37,000, which is also a gap, and then gap would be clear earlier 37,500 above close, which is also happening to with Fibonacci 23 retracement levels. On the outside support would be 35,000, which is Fibonacci 50, and below that you have 350 to 450 range band, and then you have a gap support also, which is at 33,600 levels. Fibonacci 60-minute retracement is at 34,000 nearby levels, and that's going to be very good support levels. Below that you have the previous single right? So that's the support and resistance zone that you have to make a note. Momentum divergence is momentum. It is in the sideways in Nifty. Nifty also it's in the sideways, and this is on the short term or daily. No divergence within. On divergence was there already in Nifty. We just met the starts earlier yesterday itself. The Nifty and Bank Nifty both on the medium term. The trend has not changed. It's still in bearish zones, but and with the rising strength. And similarly, the short term switch over to the sideways zone. Switch over the momentum to sideways zone. There's a mistake. We repeat it once again. Nifty and Bank Nifty is sideways momentum. That means sideways momentum, not bullish, not bearish, on both short term and medium term. No divergence other than that. Now coming to trend, this is where there is some confusion. Trend has changed and switched over to bullish zones. That is DMI posting on both indices on the short term. But in the medium and on the short term, that increase in the strength is only very weak. No, when you consider the green that is moving down, right? It's a weak moment, weak trend strength. But in the medium term, it continues to be bearish trend, and that is rising up also. If you see that chart is not shown here, but it is rising up. So short-term momentum is turned bullish. Short-term momentum and trend looks fine, but not at bullish for the moment. Now volatility has cooled up a little bit. 10% fall happened today, and it's 24.1. Anyway, below 25 is also good, but still above 20 is not that great. IV is 26.3. Implied volatility percentile is 96, still at the top. So IV is at a high level. Fear is still there in market. Then you have to cautiously do the option instrument. Open interest analysis based on the futures and options. What you're seeing, futures are showing it's a short covering. Futures open interest build up. The short covering both Nifty and Bank Nifty. Short covering is when people are short, have given up that and then covering them with going long. So that is as powerful, sometimes more powerful than long build up. So that's what the futures open interest data is. Options open interest data is what you see here. You can see that unwinding has happened in the Bank Nifty on the calls, and put build up has happened. Similarly, unwinding can be seen on the Nifty at all, also at this levels of between 16,000 and 17,000, that range. Right, additional put build up also has happened. So range is 16,000 and 7,500 is where the maximum put and call writing is seen. 16,500 and 18,000 also is another range, second level of highest number of puts and call. And 34,000 and 35,000, 36,500 is the range that is seen with the highest put and highest call is there. Support and resistances. 33,000 and 36,000 has got the next level of highest support and resistances, puts and call writing that has happened. Now it is very close. PCR put call ratio is very close to the bullishness, 0.84, 0.97 on both the indices. So overall, it is showing the put call ratio and the charts and the open interest data on futures and options are showing bullishness. Making note of these levels and relate that with the levels that we talked about in the charts and support resistance slide. Now it's green all over. All major indices, heavyweights are moved today. All the sectors are moved green. Everything is green. Index heavyweights, if you see it, is a green close obviously, and sideways on the HDFC Bank, and is heading towards the resistance on the upside. So the bounce up from this major support zone is working out. HDFC on the other hand also is in the bounce up to hit the major resistance immediate. Momentum has climbed back to the sideways zone now. Reliance has a bullish close after a small dip yesterday, and it's continues to be in the sideways zone on the edge of the channel. Probably it could break out or it could come down and then play in this channel for a long time. But momentum is yet to become bullish. Infi amount is bullish, and there is a divergence also. You can see more bullish divergence. We can mean that it can go again to the all-time high. Right? So that's a breakout of the rectangle pattern that happened. Momentum is bullish. TCS, the momentum is sideways, but it is well within the channel and slowly heading up towards the resistance on the upside. So as is a bank, you can see it's a green close. Momentum has come back now to the sideways one from the earlier bearish zones. Now Kodak Bank also is showing green today with momentum clearly in the sideways zone, right, after bouncing from the previous support zone. So Overall, if you see, bullishness is clearly visible with respect to the momentum in the Infosys only. The sectors are all bouncing and gaining the momentum. Lines is on the more edge of the trend line channel, and a breakout could happen. You have to watch out for central lines probably. So that's about the heavyweights. And now sectoral performance, you see IT has moved up at 1.8%. And it's an inside bar because of the bearish move that happened yesterday, but momentum remains sideways. Metal close gain to 0.6%, auto gain to 0.1%, pharma gain 0.42%, FMCG gain 1.75%, realty 3.64%. So across the sector move, and many sectors which were in bearish now is in sideways, and every sector is now in sideways in the short term. Now if it goes to the bullish, then we can consider picking up the stocks from the top down approach. Now, institutional participation yesterday, the selling has reduced a little bit last 2 days in the Fyers side, and buying also has reduced accordingly in the domestic institutional side. Yesterday's fall is because the domestic institution did not buy much, while the decent selling happened from the FIs. Today's data is not available. We'll quickly check whether the data has come or not. Let's just check whether yes, today's selling has happened. So for the first time, it is very happy news for the investors and traders. Basically, over a very long time, a small buying has happened from the FII side. 300 crores of buying has happened from the FII, and 772 crores of buying has happened in the cash from the domestic institutions. That is very good news. Like first time after I don't know how many days you'll have to research. Unforeseen number of days. FIS has not brought. So it's a very small buy, but this gives positive feel. The data has come in now. So that's the institutional participation. But I wish that buy was really big, right? And the FI said, at least 1,000 crore, 2,000 crore kind of buy in the cash would indicate there is no bullishness in the market. But that may happen in the coming days. You never know. But at least the selling has paused for now. We can be sure. We can hope for. Not sure, right? So we'll have to wait and watch the institutional participation next day. So USD INR has cooled off from the 76.977 kind of all-time high levels. It has cooled off to just at 76 kind of levels. So today it was a gain for rupee, but rupee has slightly strengthened. But overall, it is at a very high level. Momentum has slipped in the sideways. Trend is about to cross over, you can see. So we'll have to wait to keep a close watch on how far it is going to cool off until it comes to the 75 kind of range, right? So even the US dollar index also has cooled off and it's consolidating, but remember that the momentum is still in the bull zones, so it can spike back up again and take out the 99 anytime. Right? So that's about the dollar. So global indices, if you see, US markets showed 600 points of gain yesterday on the Dow. That's what you see. Remember, all of these charts will have to be looked at to pre-market tomorrow to get the actual picture on what happened. So this is as far as yesterday. Dow trading has not started as of now. Nasdaq is showing green. The latest Nasdaq and listed S&P 500 also is showing green, and it is showing S&P 500 is actually showing a green very close to the support zone, which could indicate that the support is gained. Similarly, the Nasdaq had a major support down, and it has bounced from there and trying to move up to the resistance on the upside, which is a previous support. So if it is climbing above the support, it may be good. Momentum is had turned to bearishness, but now it seems like it is getting back to the sideways momentum on all the major indices. So that is also positive. Crude oil has cooled off, which is another positive. Right? We have a 26% of fall. Today was a up more, but overall it was today was a slight uptick is what you see in the oil, coming above 95 levels, but overall it is a big cool off, and if cool off is continuing with the sideways momentum at least, right, then it will be good for our economy also. So dollar and the crude cooling off is very good. Now on the contrary, gold, which was spiking out and broke out from the major support zone and then almost hit the all-time high again. Pre-COVID kind of rally, everyone thought, which did not sustain. It has come back to the support zone, and momentum also has slipped in sideways zone. So hopefully it will wait and watch for the next stock tracks to pick it up. But yeah, so basically that gold breakout probably in the short term was not sustained. Let's see how far it moves in the medium term. But still, it is a cup and handle in the medium term. Yeah, two picks involves it's a breakout of the box pattern, and the momentum is having a bullish divergence, which is already work in progress, and at least till 1955 target can be kept, which is all-time high. ITC also, ITC is a stock which an analyst hate to predict on because it is an underperformer traditionally, but on a short-term trading basis. But on a long term, considering the dividend perspective and no prospects, it may be a good pick at this price. It could give a good move um, towards the next distance, 267 kind of levels, probably, right? Because it's well within a channel on the upside, and also a channel downslide is over, and it may be moving to the channel top. So charts are giving a signal for of bullishness. Crossover of the trend and momentum is also great on the very short term, right? So ITC and Infosys both long calls. So to wrap up, it's a mild bullish sort of neutral is put here because still there is uncertainty. Tomorrow, Fed outcome, you don't know how the market is going to react. War is still going on with Russia and Ukraine, and you have an expiry also. So neutral has to be there because whenever I'm not sure whether it's bull or bear, I would put it as neutral. So it's a mixture of neutral. At the same time, there is a good recovery of 7 days, 8% of recovery happening. BANKNIFTY also is bullish and participating in it, and so that's the reason why the mild bullish, right? The chart pattern support resistance level, sideways momentum crossover to the trend to the bullish. The short term, Bollinger Bands also seems to be consolidating. So all of this nutshell, 8% of recovery in 7 days, 20 DMA reclaimed. Now, the only hard is the 200 DMA and the trend line breakout and double top has been nullified. Right? But the fire selling continues. But today, it was very good news. I didn't see the news, so that was good. That at least some buying has happened in the cash market from the FISL, right? So crude still at a high level, dollar also is high level, although it has cooled off today if you look at the very short term. So it is all positive. So there's mild bullishness is there, but it is with caution. That's why neutral also is added. So 1750 and 37,500 is with two levels to clear. It has to be clear above 200 DMA before we can clearly say it is some up move that may be happening, right? Because the war crisis volatility still at very high levels. So tomorrow you have Fed event outcome that will be that's happening today, and tomorrow markets will react to that. Expiry also is tomorrow, so volatility should be expected. Either way, mean reversion or maybe moving further up. You never know where it is. So positive factors is the good 8%, but war uncertainty and all those things comes in, then all technical factors what chart says gets nullified all of a sudden, right? So black sand events like war and major news breaks, nothing works. So you have to be cautious. VIX, as long as it is not calling off consistently for 1 or 2 days below 20, you just have to be cautious. So hedging the portfolio with gold for long-term investments can be done if it is still correcting. If you otherwise, gold hedging may not be valid now. Now that it has fallen off. But that's one way of taking care of your investment losses. Investment losses also can be taken by using option strategies as well. So we can talk about all that later. Good quality stocks can still be picked at these levels. It's below 17,000. Still, you may get quality stocks which is corrected substantially. And if you're doing the options, better do it below when the VIX is cooling off a little more. And if you're forced to do it with a risk that is defined clearly, especially if you're carrying forward. Intraday, it's very difficult. V-shape moves are there every day. You hardly get to play anything after the gap up. So volatility is there. So V-shaped recoveries and reversals, all that can happen. So do tight stop losses. That's all we can. That's all within. Risk management is all in our hands, right? So that's the mild bullish view for tomorrow. And that's my view on all of this analysis that is done. So hope it helps you to frame your own rules and your own view for the market next day. So if it helps you in any way, consider it in the like button and share it to friends so that we get more subscription. We have very less subscriptions, and your help in this regard is much appreciable. And will keep us motivated to keep doing this every day. Thanks for watching. Happy trading and happy learning. Bye.